Hello and welcome to Business Incorporated live on Channels Television. Well, the first full trading week of November. Here's what's coming up in the next 55 minutes. We check how resilient the average Nigerian consumer is as price pressures weigh. And Starlink suspends new subscriptions in Nairobi. Its environs as demand surges. Plus, Egypt and IMF hold new discussions to alleviate citizens' financial burdens. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the commodity markets. Now, starting with metals, we see gold prices, there were little change today as investor caution prevailed ahead of the U.S. presidential election. At this point, we see investors there holding their breath. What's going to happen for who's going to win the elections? That's in the U.S. We see spot gold there ramping up, on the basis of that, $2,738. So we know once there's political uncertainty in the biggest economy in the world, we see investors run to the safe haven, and we're seeing the spot gold price there. But U.S. gold futures unchanged, $2,747 per ounce. Other metals we track in the area there, not looking so bad. The likes of silver and palladium. We see those prices holding on at this point. We see platinum 0.3% up, $994. And silver, $32.51, up 0.3%. And palladium, nice move there, move up 0.8%, $1,106. So that $1,000 psychological level getting bigger at this point. Let's get a check on oil now. We see oil prices rose more than 2% today on decision by OPEC Plus to delay by a month plans to increase output. So we'll see a big move up, 1.61% to start the week. That's for Brent, $74.28 a barrel. U.S. grade, $70.70. Trying to stay above the $70 level. Bigger move up, 1.74%. So we'll see if oil and the oil bulls continue, and maybe we get a positive week for the first full trading week in November. Well, one of the responsibilities of the presidential value chain unlocking programs to boost domestic production on pharmaceuticals with the target of reducing inflation in the sector. The national coordinator, Dr. Abdul Mukhtar, shows that the impact should be felt in about 12 months. Take a listen.
Local production is a medium to long-term activity. So if I told you that tomorrow we're going to start locally producing products, I would be lying to you. But what we're doing is really laying that solid foundation. I would say within the next 6 months to 1 year, you'll really have products. And I can give you specific examples. In terms of pharmaceuticals, we are working with some of the big pharma, and our focus is really in the pharmaceutical sector. Some of the already existing manufacturers here to make sure that we provide whatever incentive. Last week I was in Lagos, in Shagamu. Actually, I visited one of those big companies. I saw their ambitions to produce APIs, and they are working. And I've also visited a number of other companies to see what they are doing. So all these things will bear fruit as we lay down the policy programs that we are implementing, as we try to raise cheap financing for manufacturers. So I will say to you, in the medium term, in the next 6 months to 1 year, you'll be able to see activity.
I would say Nigeria's banking sectors weathered numerous storms, emerging as a resilient and dynamic force in Africa's financial landscape. Despite facing significant challenges such as economic volatility, regulatory changes, and evolving technological achievements, the sector continues to play a pivotal role in driving economic growth and financial inclusion. Now let's look at key trends and opportunities and risks shaping Nigeria's banking sector. Joining us for this conversation, we have Stanley Nora, as a financial inclusion expert, joining me from our Abuja studio. Great to have you on the show.
It's good to be here with you, Adi.
All right, so looking at the banking sector, we see most of the big banks declaring bumper profits. We see it's a high interest rate environment, as the central bank is continuing that tackle on inflation. But it seems, regardless of the macro headwinds, the banks in Nigeria are doing great. Or how are you seeing it?
So it's good times for the bank at the moment, because with if you check the financials of most of the banks, you see that the net asset value of most of the banks was a major contributor to the profits that they declared. So what it meant was that as the interest rates have been improved upon, the banks can charge higher for their loans, and that translates to profits for them. So eventually you see that if you juxtapose that with what you're seeing in the manufacturing sector, it doesn't really go down as much. The banks have loan impairment that they still suffer from because of the macro headwinds that we have. But as the interest rates have been improved by the central bank, so it gives the bank more avenue to gain more interest for the loans that they offer.
Looking forward, I guess it's safe to say, because the central bank is still trying to battle inflation at this time, and from forward guidance we've seen, it seems like interest rates might still go up, if they're not able to tame inflation. So should we expect the banks to continue dropping all those bumper profits going forward? Because we're going to be looking forward to the fourth quarter results. That's when we get into next year.
For the banks, at the moment, the financial institutions house the monies that we have within the economy. And as the CBN tries to curb inflation, we expect that there might still be an increase, maybe by 50 basis points by the CBN to try to curb inflation. But we're waiting for the Consumer Price Index report, and that would influence the decision of the central bank. But for the banks, they are making strides and trying to be innovative in the services that they offer. Don't forget that we have remittances that are still coming into Nigeria. Don't forget that we still have businesses that need to finance their activities, and they are constrained to still take money from the banks. And with the FX revaluation that is going on with most of the banks, because they house most of the FX that we have, so they still have an advantage as opposed to most industries in the economy. So yes, we expect to still good results from them.
Right. I guess, as most companies that we see in the consumer goods sector, we're seeing those ones are struggling, but the banks are doing really strong. Well, let's look at capital raising now. We see most of the banks have completed their rights issue at this time. But the latest now is FBNH looking to raise about 149 billion. And the bank plans to utilize the 149 billion raised in strengthening capital adequacy to meet the CBN's mandates, expanding lending across corporate and retail segments, enhancing digital infrastructure in a competitive market. But looking at the season right now, do you think investors are still keen on piling cash into the rights issue?
Yes, if you were to check the performance of some of the banks, so if you use Fidelity, for example, you'd gained, if you invested in Fidelity shares as at when it was offered, you had made appreciable gains from your investment. And that is what a lot of people are looking at. What is the investment opportunity for me? And capital appreciation. Now, FBN, on the other hand, you have a very major force in the person of Femi Otedola, and he's not somebody that you will joke with. When he makes investment decisions, a lot of people follow suit. So I think that would be a great driver for a lot of people that will want to invest in FBN. As the chairman of FBN currently, he's going to be a major driver why a lot of people will still pile up cash with the bank.
And, do you see high demand for, subscription when it comes to, this latest rights issue?
Yeah, like I mentioned, if you were to follow the trajectory of so, for example, Femi Otedola, who is the current chairman, what he did, he upped his shares to about 9.4%. And what that tells you is that he's putting his faith in that. And I know a number of people within the economy that follow just that trajectory, that, wherever this man is going, he has seen light somewhere. You remember when he left the position from oil and gas and divested into Gerku, the power station, and you've seen the tremendous return on value that he has brought into that company. So a lot of people expect to see that similar return in the banking sector. Currently, he holds, if I'm correct, he holds the second largest share in any financial institution after Jimovia. And that tells you a lot about the faith that he has going forward in the banking sector within Nigeria. And like I mentioned, a lot of people follow his investment philosophy and expect to see the right issues being subscribed.
And what do you think he's seeing? Yes. What do you think he's seeing in the banking sector? Because I know some traders, they like to follow what the whales are doing. So what do you think he's seeing, in the banking sector?
Okay, so as an overview, you will notice that there've been a bit of hitches here and there. For the banks that have been trying to upgrade their systems, we've been having the likes of Sterling, Zenith, GT upgrading their systems and trying to bring the best experience to their customers. That has come with a number of hitches because moving your system from one core banking application to another is not a day's job. And the contingency plans that they have, I don't know if it's failed some of them. But what we have seen is that there have been challenges in that. But as a whole, as the industry, what we expect to see is that we expect to still see growth. We expect to see a lot of innovation. You see that most of them are trying not to lean towards just the traditional system of making money, of interest income, and they are trying to get fees and commissions, and in every other way that they can generate as much value for shareholders and the bank. So yes, I'm still optimistic on the banking sector.
All right, definitely. We'll keep tracking to see how that sector performs. That's on the NGX. Well, thank you so much. It was great having your perspective, Stanley Onora, financial inclusion expert. Thank you.
Thank you for having me. It's nice to be here.
All right, now let's go to another topic. Now, see the discussion about Nigerian retail landscape. Let's get a check of what's playing out for the third quarter of 2024 as we analyze the major factors influencing consumer spending, during this period. We know that consumers are going through a lot right now. It's also happening, on the global scene, even though we're seeing inflation numbers come down. Most of the leading economies, we're still hearing that consumers are still, grappling with high prices, when they go, to the markets. But join us for this conversation now. We have Professor Uchenna Uzo, the Academic Director, Africa Retail Academy for Lagos Business School, joining me via Zoom. Great to have you on the show, sir.
Thank you. I'm happy to be back.
Fantastic. So what would you say were the key drivers of consumer spending in Nigeria for the third quarter of 2024?
I would say we've had an interesting time. To begin with, as you alluded to, inflation seemingly is coming down, but on the ground, we're not seeing that drop in prices. Food inflation is at about over 40% at the moment. But the interesting thing is the resilience in spending behavior that we see amongst Nigerian consumers. To begin with, Nigerians are adopting saving strategies that are quite uncommon. So for instance, they are choosing to avoid particular brands that are way above their income level, or they are going for the lowest possible prices for some of these products and services for their brands or for other alternative brands. But the thing that I find even more interesting is what Nigerians are choosing to spend their monies on right now. 95% of shoppers in Nigeria at the moment have changed their spending behavior. So 80% of what spend is going to now is food, and after food, transportation, and then utilities. And if you drill down into the data, you will also find that within the food and beverage category, the top spend items are spirits, seasoning products, and pasta. I've been asking myself, why are Nigerians choosing to spend more on spirits these days? Some people say it's because of the frustration and so on and so forth, but I think there may be more to it than that. The other interesting trend around spending is what I call the polygamous nature of spending and brand usage among Nigerian consumers. They are not as loyal as they used to be. They are choosing to use their favorite brands, but also use alternative brands at the same time. And this is creating some level of competition amongst those who are selling in these different categories. We are finding that Nigerian consumers in spending are more rational, so they're asking tough questions. They're asking, why should I buy this product in an air-conditioned shop when I can buy it by the roadside at a cheaper price? And there's one beautiful, or should I say, interesting phenomenon that we're observing as well, which is that a lot of former middle-class Nigerian consumers are moving to the lower class and determining what happens at that lower class. They have very high expectations when they want to buy, and they are forcing brands to become more accountable. So overall, the way Nigerians are spending is showing resilience in the way they save, resilience in the way they are rational about what they buy, resilience in the way that they are switching from one brand to another.
I guess you would have to choose which one will make you happier. You know, with what you told me about spirits, would you rather get a drink? Would a drink that's alcohol make you feel happier, or would you get food? So I guess that depends. But how would you say changes in government policies and regulations affecting the retail sector?
Yes, some of these changes have had strong effects. So to begin with, the cost of doing business in the retail space is much higher. Margins are affected. A couple of businesses have had to shut down. Some other ones have had to lay off workers. And what we find that is really interesting as well is the power of location in the way sales is evolving in these difficult times. A lot of retail stakeholders are finding that those of them who locate their outlets very close to densely populated areas where consumers live are ending up being more profitable. Because right now, every consumer is calculating the cost of transportation to go to wherever they need to go. And they are preferring to buy closer to their neighborhoods than ever before. The other interesting trend that we're seeing is that supermarkets are demanding for smaller pack sizes, and they are also demanding for cheaper variants. And this is now affecting how supermarkets are stocked with their stock keeping units. So it's all about smaller portions at lower prices. Some are even requiring lower quality in order that customers can afford those products and services. But there's something that is also interesting, which is the boom that is taking place in Nigeria's apparel retail sector. So it's not all gloom, there's some boom. In that particular sector, we are seeing that the high cost of importation is now creating a preference for made in Nigerian apparel products, like Adire products. And this is also driven by Nollywood. This is also driven by the Japa or the migration phenomenon, where people are feeling that they want to use Nigerian products a lot more. And this is beginning to create some buzz, which we are likely to see grow in the next coming months.
All right, let's look at retailers now. What strategies would you say retailers have to employ to mitigate the inflationary pressures and maintain sales? Because you did mention we see consumers switching from more expensive commodities and moving to the cheaper ones when they're trying to make those purchase decisions.
Yeah, so now it's all about innovation. Innovation is what is standing people out. And the interesting thing, as it says, in a place like Nigeria, is precisely when there's adversity, when there's chaos, that you see some of the strongest forms of innovation. So there are three trends or three innovative strategies that players in this sector are using. The first one is business model innovation. So what that means is that a lot of brands in the retail sector are rethinking the way they position their businesses, the way they arrange their assortment. I'll give you a particular example, which is a new phenomenon that is rising. Restaurants are now being located within supermarkets. So a lot of supermarkets are finding that bread alone is the single largest producer of traffic within the store. And that by moving from bread to offering other food products, by creating little food kiosks or restaurants within the very supermarket, they are finding that their profitability is rising more than they ever expected. And so they are repositioning their stores to be more of eateries, selling other products around it. The other interesting trend we're seeing is packaging innovation. Just by reducing the size of the packages, redesigning them, remodeling them, a lot of players are finding that products become a bit cheaper, become more affordable for the target customer, and they are able to stay afloat. But the third one, which I think is the most exciting form of innovation I have seen, is now the increase in made in Nigerian products. There's a lot of interest now, even in the retail level, to go for products that are sourced locally, that are manufactured locally, and there's an increasing appetite to export, which is why the Africa Retail Academy is putting together the third African Retail Congress, Africa Retail Congress of 2024, aimed at helping retail stakeholders all over Nigeria and Africa to discuss how to take their retail beyond borders. And it's going to accommodate all the retail stakeholders, people in government, financiers, consumers, distributors, retailers. And it's easy to sign up for it by just going to Google and typing in the Africa Retail Congress 2024.
So I guess it's safe to say higher prices for imported goods. I guess that's a blessing in disguise. As you said, Nigerians now are buying Nigeria at this point. So, but talk to me about expected key drivers for consumer spending. In this fourth quarter, we have festivities coming up.
So with festivities coming up, we are going to see more spending. It's usually like that. People want to spend, people want to give gifts, people want to resell, people want to enjoy during events. And so we're going to see this play out in increased spending, increased sales. However, it's going to be a moderate increase because we know what inflation is doing to us. But one interesting trend that will go along with this is that you are going to see shoppers being a lot more rational. They are going to be going online first to check very well what prices are, to compare prices before they buy. And they are also going to be going to the source, the very source, to get cheaper products and services to buy. So they're going to bypass middlemen a lot more and try to find where they'll find products and services that fit their budget. These are some of the trends we anticipate will show up in this seasonal time.
All right, Prof, but before I let you go, I want you to weigh in on this matter now. We know a pressing issue is for consumers is fuel prices. And we've seen, comments from the Dangote refinery, counter comments from petroleum marketers, about which price is cheaper. Is it better to import fuel or is it better to buy from the Dangote refinery? But from all of this, it seems nobody cares about the consumer at all.
Yeah. So is what is happening. And in a situation of a price war, there can be a lot of confusion. But in the end, the market will settle. Who wins a price war? At the end of the day, it is the consumer that wins a price war. Because the consumer will be able to find different prices for the same product, and they will logically go for the one that is the cheapest, the one that fits their budget. However, it will help the economy a lot for this price instability to go away, for there to be more certainty about what the prices of PMS should be. And once there's more certainty, even if the prices would go up, it's easier to manage business, it's easier to plan, it's easier to serve the consumer. So we should move from a state of uncertainty to one to relative stability, if we want to grow the consumer base and also grow the economy.
Right, Prof, definitely for me personally, I want to see those prices go lower because it's always painful when I have to buy fuel every time. Well, thank you so much, Professor Ochenauzo, Academic Director, African Retail Academy, Lagos Business School. Thank you for coming on.
Thank you. My pleasure. Have a nice day.
You too. All right, we'll take a break now. When we come back, we'll head straight to the markets. That's in a moment. Just stay with us. All right, it's time to get a check on what's playing out for the local bourse. That's for the NGX, how it's starting out the first full trading week of November, and also major markets that we track globally. And we have John Mekwa to bring us up to speed on what's playing out in most of those markets. Great to have you. And
thanks,
I don't know what the color of your outfit is telling me about the market, but I guess it's good at this point.
I want to believe it's good, even though it's not looking so good this intraday. But globally, Ladi, this week is a very sensitive week for the market.
Right.
So many big things happening. You have from the United States election. It's just tomorrow. We've been talking about it.
It's quite incredible. It's upon us at this point.
Yes, it is upon us. And then we also have the Federal Reserve. They're also meeting this week. And so those are two big things that we know investors are looking out for and leaving the market shaky. I don't know if that's what's affecting the Nigerian market.
And I'm thinking, investors will overreact, at this point, either to the up or down.
Ladi, when your money is involved, you have to be very cautious.
Right.
You understand? You don't take risk because it's not easy to make money, but it's easy to lose it. So you don't blame the investors. They're just being very cautious before taking any decision. So if we see any uncertainty in the market, we just do that.
Reactions.
All right, so good afternoon, everyone, and this is the market segment, obviously. I think before we go into the numbers proper, let's just do a little bit about Nigerian market with Miriam Yakubu, a financial market analyst with Chapel Hill, and what we're doing with Miriam. Hi, Miriam, good afternoon. Are you there? Can you hear me?
I can hear you.
Great. So October is over today. This week is going to mark the first full week, trading week in the month of November. Let's do a bit of review and look at the banking sector last month, October. With all of the activities, was it positive or negative for investors in the banking sector at the NGX?
So last month, we saw several of the banking names release their results, and we saw positive sentiments, especially in UBA and GTCO. Therefore, we also saw announcements of dividends. Therefore, the banking sector was positive in October.
Great. What about the oil and gas? We know that Aradel brought a boost to the market cap, but we also see a whole lot of profit taking happening on Aradel, and that I'm sure affected the oil and gas counter.
So the oil and gas sector actually gained in October by about 16.9%, and it was largely due to the gains in Seplat and Owando. However, we know that Aradel listed last month. When it came to the market cap was around 3 trillion naira and was actually among the top 10. But because we saw profit taking due to the fact that when it was listed on NASD, it gained over 100%. Therefore, we're not surprised that there's a lot of profit taking in the stock at the moment, which has dampened the gains in the oil and gas sector.
Can we say the gloomy days are over for Aradel? Profit taking, can we see a reverse on it? Do we expect that for November?
Well, we can't say much to that, but towards the end of the year, we expect that there will definitely be a boost in Aradel as institutional investors come into the market to balance their portfolio.
And insurance, that's another interesting one for me, a whole lot of penny stocks. But we saw some positive movement on it. I wonder if that attention is still being sustained in the month of November.
Well, like we said, for November, we don't really expect much till towards the end of November and December before we see any positive gains due to institutional investors coming into the market. So at that time, we might continue to see, increase or uptick in prices.
All right, for just before I came on, I checked on trading and I saw that we're negative. We've even lost our 97,000 level. What's the sentiment at the market at this time?
Yes, like we said, a lot of profit-taking activities in the market due to the gains that we saw in October, especially in the banking sector.
So it's a negative one, unfortunately. Well, thank you so much, Miriam Yakubu, for your perspective this afternoon.
Thank you.
All right, so let's see other markets now on the continent. Nigeria is in the red at this time, 0.40. This was earlier, so by now, by the time I was coming, it was 96,954.69. It's down from this 97,000 level for Nigeria. And there you heard from Miriam, investors seem to be taking profit made in the month of October, so it's negative for now. For Johannesburg, it's positive 0.06%, and they've gone up to 86,000 there, 86,251 for Johannesburg. Look at other markets on the continent. Egypt is looking good, 0.12%, 30,864.32 for Nairobi. This is the close from Friday, deeply in the red, 0.94%, and losing that 118 level which they had at the beginning of the week. That's last week. Let's go to other market now, the Middle East, and we see red in Dubai at 0.38% at 4,603.79. Abu Dhabi is also red, 0.24% at 9,326.66. Other markets on the region or in that region, Tadawul is also red. Just the only green that we have for the Middle East this afternoon is Qatar. Qatar is up 0.36%, 10,545.40. Move on to America. Okay, there, the American market. These are features for this morning. Well, this is the market to look out for this week. A whole lot we expect to happen now. Although a lot of them have been priced in, analysts and economists have been giving projections and forecasts, and that has been priced into the market. So we see the features for Dow Jones this morning in the green. So is the S&P as well as the NASDAQ. Result, I don't know if the financial results will have a lot of impact on the market and investor sentiment this week because they have a bigger picture to look out to. But this is the features looking green for the U.S. on this Monday. They're geared, of course, for that U.S. presidential election. And some results also showed, for instance, NVIDIA shares were up 2% in pre-market. And then chip maker would replace rival Intel. So that's good news for them. Perhaps that's why we see that positive right there. But I mean, clock is ticking to Tuesday to see what's going to happen there. Asia is our next focus this afternoon, and we see that Asia Pacific markets rose as investors ready for a busy week. That, of course, includes the U.S. presidential election and as well as the Federal Reserve's policy meeting. What a week. This is a loaded week. They're also looking at China's parliament meeting. Remember that stimulus package from China? Well, at the end of the day, seemed to have bring up some positive sentiments. The Chinese authorities are expected to announce more details on that stimulus formula. That's will be later on this week. So we see the Nikkei is at 37,000 after it lost more than 2.5%, 2.63%. Kospi in the red, 1.83. Hang Seng also in the green, beg your pardon, Kospi of Korea, and then Hang Seng also. See other markets on the region. Shanghai, always looking out for this Shanghai because it's very, very sensitive, very volatile. For India, 1.27% in the green at 23,995.35, Vladi. So that's how the market is looking. Right. It's going to be a very interesting week. Even though, I mean, as I said earlier, a lot of the expectations have been priced in. Remember when Nigeria was preparing for the elections, it was priced in as in the sentiment of the top candidate. And what happened then was the market was happy with any of the top candidates. So
Right.
we saw positive movement. So I'm sure it's the same thing for especially the US and the Asian market.
Yeah, it's going to be quite
interesting.
interesting, to track, to see, when they announce the winner, how the markets are going to react to Kamala Harris, win or a Trump win.
I think
It's definitely
that will be
looking
our Wednesday morning. We're going to see that. Because, I think more than 10 million, 11 million have already cast
their
their
votes,
votes. So, it's just a couple of millions later, and then the results. It's not like Africa. We have to wait for days to get our
Don't
results.
tell me about Nigerian elections right now.
I said Africa.
Africa, yeah. Thank you so much.
Thank you,
Edie, for giving us the details there in most of those markets. Well, let's get a check on what's playing out in the UK now. We have Juliana join us from our London studio. And Bryson, great to have you, Juliana.
Good afternoon, laddie.
Fantastic. Good to have you. So, it's all about US right now. But what economic data are we expecting in the UK this week? And we know the BOE should be meeting for rates.
That's absolutely right. I've got to tell you, I'm just listening in to your conversation with Innie about the US election, and it's palpable. We have a very strong relationship, as you know, the UK has a very strong relationship with the US. So all eyes, all media attention is pretty much there. Although this week we've got our own slew of pretty big stories. Of course, none of them are going to trump the Trump-Harris, election. But we do have the Bank of England Monetary Policy Committee gathering on Thursday. And of course, we know this is of significant importance because it comes just barely after we got that bombastic budget from Rachel Reeves, first female chancellor in 800 years to deliver a fiscal statement. And of course, that came with £40 billion worth of tax hikes and a significant amount of borrowing to invest and to kind of rebuild Britain. And of course, a lot of economists over the past couple of days have been trying to crunch those numbers. So it's going to be really interesting to see what the Bank of England Governor, Andrew Bailey, has to say at the outcome of the October ratings meeting. And now interest rates in the country are currently at 5%. They fell from a 16-year high in August by 0.25% to 5%. Interest rates were held in September. So I think the market consensus is that they will drop by about 0.25% again. So interest rates are expected to hit 4.75% on Thursday. And one of the main reasons why, separately from the budget, is because of CPI. Now, we know that inflation was at double digits at one point post-pandemic, related issues there, but they have since come down, and they're down to 1.7%, which is, I believe, the lowest level they've been in a significant number of years. And the reasons why interest rates were high is to bring down inflation. It is now lower, but there were some suggestions, particularly from the Office for Budget Responsibility, that Rachel Reeves's budget would actually push up inflation. So we're not expecting there to be consistent cuts, but perhaps a cut every quarter beginning on Thursday. But as we're used to hearing and saying, laddie, we shall wait and see.
We shall wait and see, because the battle to tame inflation continues regardless. But how are investors bracing for the US elections there?
Gosh, we're all waiting, aren't we? Particularly in the UK, as I said at the top there, we've got a very special relationship with the US. I think markets, of course, are nervous. We're all nervous, really. I think, of course, it goes without saying that I think markets would be a lot more comfortable with a Harris win, because, again, that would mean a continuation of foreign policy, a continuation of monetary policy, perhaps. But then, of course, if a Trump policy, if a Trump victory is secured, then perhaps there will be a change in geopolitics, right? There will be a renegotiation of long-standing trade policies, more of a protectionist stance, which we were all used to observing during the Make America Great Again years. So yeah, markets are pretty nervous, but buoyant at intraday. In the UK, the FTSE All Share is up 0.59%. The FTSE 100, the blue chip, that's up by 0.57%. And the FTSE 250, the domestic market, that's up by 0.43%. There is Burberry, that British luxury brand, is one of the main risers, actually, because there's perhaps a takeover deal by Moncler. As well, if we move over to currencies, the British pound is doing very, very well against the US dollar. That may change in a couple of hours. It's up 0.12%, though it's trading down against the euro by 0.12% and down against the Japanese yen by 0.22% at intraday, Laddie.
Right, it'll be quite interesting to see how the election results impact. That's the US dollar, but we'll definitely find out. Thank you so much, Juliana, for giving us the details right there from the UK. Let's get a check on Europe now. We'll see questions about how long can Germany's ruling coalition continue. That's a major question now being asked in Berlin after a leaked document showed that the country's finance minister calling for an immediate reform. So join us for more now. We have Chimpondo Chimbelu in Berlin. So Chip, what's the latest?
Thanks for having me. On Sunday, Laddie, the German Chancellor Olaf Scholz met with Christian Lindner, who is the leader of the Free Democrats. Now, that's one of the two other parties in the ruling coalition. And Lindner penned an 18-page document which was leaked to the press on Friday. And in it, he calls for the country to abandon climate goals that are more ambitious than the European Union's targets and also to get rid of some social reforms. Now, that is something that puts the finance minister at odds with the two other parties in the ruling coalition, the Social Democrats and the Greens. And that, of course, has left German media speculating about how long the ruling coalition will last. Now, the German federal elections are scheduled for September 25th next year, but there are doubts the coalition can work together until then. And the next couple of months will be pivotal for the ruling parties. They will be trying to show voters that they are better than their coalition partners, and that will, of course, make a difficult relationship even more complicated.
So how's the ruling coalition's crisis affecting Germany's economy?
Well, the government's response to the economic crisis has failed to impress voters, and businesses too are unimpressed. Instead of working together, the parties appear to be pushing their own interests. Last week, the Social Democrats, the Greens, and the Free Democrats held 3 different events with business representatives, and each party was pitching itself as the group with the answers. And businesses are critical. They say action is needed, but the government has failed to deliver. Now, many economists say Germany's economy urgently needs reform. So the lack of action by the government isn't helping tackle the country's economic challenges. A recent poll shows that more Germans would like to see early federal elections before September next year. And this week could be decisive. Over the weekend, media reported that German Chancellor Olaf Scholz will meet with the leaders of the Greens and the Free Democrats. So everyone is now wondering what the Chancellor's next move is going to be, and of course, what that would mean for the future of the ruling coalition.
All right, what are you seeing in the markets in Europe?
Well, Laddie, European markets are expected to be little changed. Now, investors are on edge, and any traders betting on a Harris or Trump victory have already done so. And now they are waiting. U.S. voters will head to the polls tomorrow, so it won't be until Wednesday morning that markets will be able to respond to the election result, assuming we have it by then, of course. And of course, on the corporate calendar today, German biotech firm BioNTech is set to release its third quarter earnings report. And of course, last week, its partner, Pfizer, which it developed its COVID-19 vaccine with, raised its annual targets thanks to strong demand for the COVID-19 drug Paxlovid. And on the economic calendar, Germany's PMI for October will be released today, and later on we'll be getting U.S. durable goods and factory orders for September.
So much to look out for this week. Thank you so much, Chip. Let's get a check out all the stories now. We see in Kenya, this is Elon Musk's satellite internet. Starlink is no longer accepting new subscriptions in Nairobi and areas around it. This follows high demand experience in the area in the past few months after the company introduced an installation discount. So I guess that's good for business, when demand is rising more than supply. Let's get a check on what's happening in North Africa. Now we see Egypt and International Monetary Fund have agreed to review their joint credit facilitation program to ensure that no additional burdens are placed on citizens. Egyptian Prime Minister reiterated the government's commitment to maintaining a flexible exchange rate in coordination with the central bank to safeguard the progress achieved in this area. He expressed hope that the meetings with the IMF delegation in the coming days would conclude the fourth review of the economic reform program. And talking about the markets now, let's get a check on what's playing out in the highly volatile crypto market. We see Bitcoin there up about 0.49%, with mostly green on the screen right there this afternoon. But Solana is in the red, Cardano in the red. Looking at Coin 360 there, that shows us what the color is in the market. All right, let's get a check on major cryptocurrencies that we track now, the top 100, and the sentiment in the market. How are traders feeling in this market? Talking about the Fear Greed Index, 70 points, still a greedy market, regardless of the volatility that we're seeing right now with the U.S. Elections. All right, let's get a check on what's playing out. Gilbert Jopata joins us now, is a lead at Investor Lodge. Great to have you on the show, Gilbert.
Yeah, greetings, Mr. Ladi.
Yeah, I'm wondering if you're as nervous as most investors right now as they're doing or taking on the election trade at this point. How are you seeing it?
A lot of person thinks whoever wins the election will impact Bitcoin pricing, but they think it can impact Bitcoin price to the up or downside, but I largely disagree with this, and I'll tell you why. Bitcoin is going to go up and will continue to go up even after the election, regardless of who wins. And this is because, one, macroeconomic environment is friendly. The Feds have already started cutting rates. We'll have another rate cut on Thursday. And at the end of the year, China is cutting rates. Also, when we look at the M2 monetary supply, and then a lot of capital is coming into the market, from traditional investors through the ETF, the halving has taken place, and then supply shock always get priced in 6 months after, which started at the end of last month. So we will go up, and I think January next year will be like January 2020. Who wins the election only matters if we want to consider how high we will go. But then smart investors must think the way dumb investors always think. And this is because every dollar that they put into the market matters. There is this narrative that is being believed that whenever a Republican wins an election is good for the market. And so many persons are already pricing in a bet, they want maybe the Republicans to win. But, this is a close tie. It's been showed that and suggests that the race is very close. But however, the market always do well regardless of who is president. But then why narrative drive the market, capital, and then prices? I think recent gain in the treasury market and the dollar, makes those in the predictive market, they're anticipating a win for Trump. But then polls still suggest that this is a very close race. But then I think this means that if a Republican party wins this election, we'll have a short-term price surge. But there are probability if the Democrats win, then there may be a short-term unwinding.
So you're telling me that come tomorrow we get the winner, and maybe Kamala Harris is announced as the winner. What candle direction are you seeing immediately for Bitcoin?
Okay, the election will happen tomorrow, but we are going to have more, results to a large level of certainty to know who is leading from Wednesday. So what they are, investors right now are placing their bets already in the market in regards to who they want to win and who they actually think will win. And if you look at the structure of Bitcoin in particular, you will see that there is a very heavy, support level, and is structured for some continuation. But this means that while some investors are pricing in their bets, who they want to win or who they think will win, it also means that a couple of more investors are on the sidelines. I want to know who will win, because whosoever wins is going to affect fiscal policy and also economic policy. So there are lots of investors still on the sidelines and waiting to see what the election result will look like.
I guess if you're not sure, just sit on your money at this point. But we know the U.S. Fed is supposed to meet also this week. What are you expecting with that?
Okay, it's largely expected that they will deliver another 25 basis points cuts, and this followed after we already had a 50 basis reduction. But, after Friday's non-farm payroll report that shows that there is almost a stall in growth, and this came out as a result of strike, weather disruption, and so it has rather cemented more of an expectation of a smaller rate cut. So I think that the market have already priced in another 25 basis point cut on Thursday, and then we'll have another by December that could also be 25. But then I think that whatsoever the Fed statement will be very important, because it will show us whether there is resilience, in the market, and how slow the cut may continue. But then I think a lot of this will depend on data that will come out. And I think this is also what the Fed chair will say on Thursday, that the size of the next cut that we'll have by December and also following from next year will be very determinant on the data that will come from the US markets.
And very quickly now, just imagine we're at the end of the week. Are you going to be shorting Bitcoin now or going long?
Okay, there are two things. First of all, it does not make sense as an investor to think of shorting the market, because the trend is always your friend, and we're in a bigger time frame of an upside surge. But then, when I think as a trader entering the week, should I short or should I go long? I think there are two things to it. First of all, Bitcoin retracement to 68K, that before was a resistance, has become a support. And then we need a very heavy news to take us down, and then 65 has already showed that there is enough volume. But then, should we go long or short? I think that we have a larger probability of having an upside this week, and as a matter of fact, probability of even an all-time high, if you look at the market structure technically. But then I think that the events we are going to have this week, such as the US election and then rate cut on Thursday, the data we will have will be the triggering events that could lead Bitcoin to an all-time high this year.
All right.
This week.
All right. We'll see if that plays out for this week. Thank you so much, Gilbert Jokwada, team lead, Smart Investor Lodge. Thank you.
Yeah, thanks for having me, Ms. Ladi.
All right, so that's the show today. You can always watch it again on our YouTube channel. You can also get more updates on our website, www.channelstv.com. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.